Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time, back with his Sunday expert, Mr. Dan Bird. How you doing, sir?
I'm doing great. How are you?
I'm doing well, man. So our first video of two today, we're going to talk about CPI, consumer sentiment, and a potential rug pull by the Fed on Wednesday. Why don't we start with CPI? But I got to tell you, consumer sentiment was just as important. But let's start with CPI because you and I, frankly, disagreed on what that might come to last week. So what happened? Where'd it come in at?
So apparently you're the expert.
I got lucky, man. I got lucky.
Yeah.
Yeah. So it came in hot, right? It came
in hot. Yeah. Let me share my screen and I'll talk about what this means for the rest of the year and
please
whether it even makes sense to continue doing this.
Okay.
I mean, doing this chart because it's getting to the point now where it may not even make any sense.
Yeah. It's becoming illogical.
Right. Yeah. I mean, one more month we'll know, but if it continues to come in hot, it's not going to make any sense.
Yeah.
So.
And if I were to kind of summarize this chart for folks, is basically you took a number produced by Fannie Mae, which said at the end of the year, we're going to have 6.6%
average for the year.
Right. For the year. And I believe they did that back in April or March of this year. So
it was in March. Yeah, it was in March.
It was a long duration. So what you have been doing is, okay, if that's the goalpost, let's take actuals and then we'll put in estimates to get to 6.6. That's what this chart is.
That's right.
Okay.
Exactly. Yeah. And that's why I say it may not make any sense after next month, because you can see down here what the estimates need to be. 8.3. I mean, that's reasonable. Maybe we could get to 8.3, but then it's going to go 7, 6, 5, 4.5. I mean, it's getting to the point where it's not likely going to get to 6.6.
Yeah. Even the Federal Reserve couldn't say this with a straight face that this is possible.
Well, no, they could. We'll talk about that.
Okay.
Good. I mean, it still could be possible.
Yeah.
And we'll talk about how it could be possible.
Well, at some point, yeah, I got you. So the number came in hot. Again, I've looked at the numbers.
And by the way, I talked about that in my newsletter. Let me
yeah, you did.
My newsletter up. Just for those folks who might want to get this. I do this every week. Just send me it's free. There's no charge. I do it for my own research and share it with everybody. Just send me an email to breakpointtrading@gmail.com and I'll add you to the list. And if you get tired of getting it, just let me know and I'll take you off the list. No big deal. There's no charge for it. So
yeah, lots of great charts and information. Again, you could definitely see that you pull this together every week to make this investment decisions or trading decisions, both.
Right. So, or do nothing decisions.
Or yeah, sit in cash, do nothing. Yeah.
Right.
Exactly.
And there's some cartoons in there, like this one on the right. wife and kids to support, interest rate rise to support.
Yeah. So CPI came in hot. For me, CPI was not.
By the way, just as a point on this, these two little charts right here are from Investors Business Daily, and every week they put what their outlook is. 1 week ago, it was market and confirmed uptrend. one week later, market in correction.
Yeah, that's a bipolar market.
So that's how fast things changed.
Yeah, and this really was, and I talked about this with you. I have a Wall Street guy on Monday. I actually did it last week, I think, with Taylor, who's the Wall Street guy. And I was like, Wall Street is making a bet, right? Wall Street is buying the dip. They're set up for a light, right? The trend to be confirmed. Everybody was set up for peak inflation. And then it didn't happen and the market got smashed. And based on crypto this weekend, it's going to have more pain on Monday. This is not over.
Yeah, absolutely. It's not over. I mean, I've talked about 3,500 before, and we'll talk about that maybe in the second session, but
yeah, we will.
But back to this chart here. So we're still at peak inflation. We went up a notch. So we had 8.5, 8.3, and then 8.6. If we go back to 8.3, this is what it looks like on the right. And in fact, if we hit these estimates over here, we've got a steep decline and then a flattening out by the end of the year. But if we come in hot again, if anything above my estimate of 8.3 and even 8.3 to try to hit the 765,
yeah,
it's going to be a challenge, but there is a way to do it.
Okay.
There is a way to do it. And I talked about it in the newsletter. And the way to do it is for the Fed to get very aggressive.
So Paul
And
Volcker
on Wednesday, and I talked last week that, you know, this CPI report comes before the Fed meeting.
We did.
So the Fed meeting's on Wednesday.
Mm-hmm.
I would not be at all surprised to see them go 75, and they might even go 100.
Mm-hmm.
Now, let me show you why I say that.
Okay.
And I put this chart in my newsletter as well.
Okay.
So this is one I put together that kind of compares a number of different things. The blue shaded area is the 10-year treasury. The red shaded area is the 2-year treasury. This goes back 10 years. The green line is the S&P.
Okay.
And the gray areas are the recessions we've had. Okay.
Mm-hmm.
The pink one is the Fed funds rate.
Yeah.
All right.
That's funny.
And you can see the circles where the yield was inverted. And down here, this is the 10 minus the 2, which is the way you usually look at the yields and where the inversions come in. All right. So it inverted here just before a recession, and inverted here just before a recession. The 2-year treasury spiked, and the 10-year too, for that matter, spiked significally last week.
Yep. The gap also got closer. I actually started talking about on Friday.
The gap didn't quite get closed, but if you look down here, it's almost there. It's heading that direction.
Yeah, closer. But I talked.
If you follow this peak line right here where it ended, all the way over to where it was the last time as it was going up. You know, this section here, we're already above this one. You know, the 2018, 2019, just before the 2020 recession, we're already above that.
Yeah.
Right. So if you take this all the way back to where it was going up, not where it was coming down, but where it was going up before, way back here, and you look at where the Fed funds rate was at that time.
Interesting.
Right. And look where the Fed funds rate is now.
Oh my gosh.
They have a lot of territory to make up.
That is amazing visualization. So they were probably, I don't know, just squinting at this 50, maybe 60 basis points behind. Now they're 1.5. Oh my God.
Yeah. And if you look at this bottom panel is the CPI going back 10 years. And I put a channel in here, these 2 blue lines here. This is the channel from 2009, after that recession. Actually, in the middle of the recession, it started going up. And inflation sort of just trended higher in a nice orderly fashion. That's what you want it to do. You want inflation. You do not want deflation.
Correct.
You want some inflation, you know, somewhere around 2% or below. And this is what you want it to look like: a nice orderly range, steadily going up. But right here in 2021, so here's the COVID crash, COVID recession here. Where it went down, CPI went down, and then CPI started creeping back up. It broke out here in the beginning of 21. All right. But the Fed might have said, well, maybe it's not that far. But by June of 2021, it was well above the channel.
Yeah.
You see that right there?
I do.
And if we follow that up to where the Fed funds rate is, they had not started yet. No. That's where they should have started raising, right there.
Amen.
And that's why I say they're behind. Now, how can we hit those numbers by the end of the year to get to 6.6 inflation? Well, they've got to move this rate up, straight up, parabolic. They've got to do maybe 100 on Wednesday and 75 in July.
Yes.
In order to get this back up to something that's more normalized.
Yeah. So let's talk about that a little bit, because I brought that up on Friday and again on Saturday in my daily financial news. I believe the Fed needs to Paul Volcker, whatever you want to call it. They need to get some stones. They need to surprise the market.
I think they will Wednesday.
You think so? Jerome Powell is, again, I actually came out and said, I believe Jerome Powell is what he is going to do. He's going to say, here's your 50. We've already told you another 50 is coming. By the way, I'm going to tell you 50s are coming the next 2 meetings. So I believe Jerome Powell is weak, and he is going to continue this. I'm going to tell the market what's coming and then deliver on. I think that is the wrong strategy. It's weak, and he will stay behind. What they should do is exactly.
I don't think he will. I think he's going to surprise the market.
Okay. Well, this is what I said on Friday and Saturday. The Fed has got to kick the market in the nuts. I said that exact phrase. He should do 100. I would take 75. He needs to do something to tell the market he's in charge. He is done telling you what's coming, and he needs to take this shit up right now.
Maybe I should put him on my newsletter.
Anybody got his email address? Yeah. Yeah. So again, I want them to. I hope they do. If they don't, this continues ripping a Band-Aid off it one hair at a time. It's painful. It hurts longer. He has to give up. He has to cause a hard landing. He needs to take this up 100 points on Wednesday. I don't know that. I don't think he has the stones.
By the way, here's what the market looked like. Last time we talked, we were in this flag pattern.
Yep.
And I said if we broke out, we'd be up above 4,300. If we broke down, we're probably headed to 3,700.
Yep. Notice
that it actually broke through the bottom of this on Thursday before the number came out.
The close was very weak, as I recall.
Well, look at that. Look at that candle.
Oh, yeah. The close
That's huge.
At the bottom.
That's huge.
Yeah.
Close, yeah, all the way at the bottom. And that was before the number came out. So who knew? Somebody knew. I mean, you said the market was setting up for peak inflation, but somebody on Thursday found out what the number is going to be.
Somebody got a whisper.
Yeah. How does that happen?
They watch my channel.
All right. Yeah. Right.
No, just kidding.
And then it just continues down, just continued down. So we'll talk about in the next section, where it's going to go. Well, let's talk about sentiment.
Yeah. So it's funny, on my channel, the CPI was such a hot number. On any other day of the entire year, this consumer sentiment nastiness would have been the most important news, except the fact it happened to come on the same day that peak inflation was not validated. So
Right.
Yeah, consumer sentiment, I talked about Saturday morning on the daily financial news, the worst ever.
Yep. You can see here the pink line down here at the bottom. That kind of goes across the lows back in the recession in 2008. And then we had a brief period in 2011 where sentiment went down.
This report
even during the COVID crash, it wasn't this low.
Dude, this report's not like some economics reports you say ever, they're like 8 years old. This report is 52 years old. This report goes back to the 74, 75 recession. This goes back to 81, Paul Volckering this thing. This goes through the dot-com crash, the Great Recession. Consumer sentiment is the worst ever.
Yeah, I talked about consumer sentiment in my newsletter a couple of weeks ago, and I showed a chart then, and I said it's never been below 51.
Now it has.
Well, it is now.
It is now.
And this bottom panel down here is a 12-month rate of change. So that's the velocity at which it's declining.
Oh my goodness.
All right. So you can see right here, right from the beginning of the year. I mean, you could have predicted this at the start of the year, the way this was dropping.
Jeez.
But this is just going straight down.
Yeah, we're not done. This thing's going to be in the 40s next month.
Well, we'll see. Consumer sentiment means, what do consumers feel about the direction? This is not just of the market.
No, of course.
Yeah. This is the direction of the country.
Yep. Correct.
Right. Their finances, the country itself. How do they feel about the overall picture?
And I stand by my statement.
Yeah. Yeah. I mean, it could continue down until the election. It doesn't look good for Biden, I'll tell you that, or the Democrats.
No, come on. Yeah, yeah.
Because this is telegraphing something. This is not just the market. This is not just.
No, it's the economy.
It's not the economy. It's the country. The direction of the country.
Yes.
So yeah, never been that low.
Yeah. So again, we cannot call peak inflation. Right. We can't say that yet because we don't have a trend. We can't.
That's right. No, we don't have a trend.
We don't have a trend.
We don't have a trend. Like I said last time, one data point does not make a trend, and we still do not have a trend.
Correct. So no.
Which means we don't have a trend going back up either. We don't have a trend
correct. No trend either way. Just can't say it. Consumer sentiment trend going down. Worse again. When I heard it was the worst in 52 years, I actually had to go look it up because again the 70s were horrible. That's when you had the misery index and all these other nastiness. I'm like, how could it be worse than the 70s? It's worse. How can this be worse when mortgage rates were 18%? It's worse. The dot-com crash, no, it was worse. The Great Recession, nope, worse.
Yeah, I put it in my newsletter a couple of weeks ago. I mean, you can go back and look at it 2 or 3 weeks ago. I actually had the chart. I think it was a 50-year chart going back to the beginning.
52
and
years.
51 was the lowest it had ever been, ever.
Yeah. Ever. Yeah.
And it's below that. The other thing we talked about last week, and I didn't have the chart then, but I do now, is the market versus the economy. We've talked before about the market is usually 6 to 9 months ahead of the economy.
Correct.
But this illustrates what that means. So when I went back and looked at this, I actually had this arrow back over here. This is a couple of months ago.
Okay.
I said that the economy is still sort of at its peak, even though the market is going down.
Right.
Well, now I think we're more like over here.
That's fair.
The market is in a bear market. It's not done yet. This is a late bear market. We've still got more downside left in the market, but we have a lot more downside left in the economy. Yeah. So notice where the recession is. Recession hasn't even started when the stock market is in a bear market. The recession hasn't even begun.
Yep.
Now, what this means, and this is a really important point that anyone that wants to be in the stock market needs to understand, the market will start recovering long before the economy does, probably in the middle of a recession.
Probably.
So when everyone thinks it's the bleakest, that's the time you should be buying.
Yeah.
And we'll talk about, where the S&P is going to go in the next session.
Yep. Yeah. Where pain might finally capitulate. Cause that's where the other thing I've done some research on here recently, cause I've been calling the 70s. I did some reading on the 70s yesterday. The market in the 1970s ultimately went down 50%. But what people don't realize, Dan, is it was a 20-month journey from peak to trough.
Well, I'm going to show you that. I'm going to show you the statistics on that in the next session.
Awesome. Because again, that
I had it in the newsletter, but I'll show you that chart.
Yeah, that's important because again, a lot of people that have been investing for the last 12 years who have gotten used to buy the dip, they feel like it should be right around the corner. And this thing could grind lower for months and months and months.
Depends on what the Fed does.
I agree. And that's
by the way, if the Fed does surprise,
yep.
Let's say they go to 100 on Wednesday.
Okay. Yeah.
The market's going to have a huge sell-off. And then it will turn around and have a big rally.
Oh, I agree. Yeah. But that day, oh my God, that day.
Yeah. It comes at 2:00. So it's that day and the next day.
Yes, correct. It's Wednesday. Yeah. Wednesday,
right.
All right. Why don't you show your newsletter one more time? Because this is something I look at every week. breakpointtrading@gmail.com, just in case you happen to be listening on a podcast. If you're listening on a podcast to this video, you are missing out on awesome charts. Go check out Dan's playlist on my YouTube channel, because listening to this on without the charts would probably be pretty hard to do, but there you go. So Dan, any closing thoughts?
A lot of these I put in the newsletter, so it gives you time to look at it and take it all in. And I try to explain it as best I can as well. So
very cool.
That it was not a good number. Everybody's rethinking their strategy. Yep. I was hoping for peak inflation. I thought the market might start going up.
Yep.
Now I'm mostly in cash anyway. I've got 1 or 2 little things that I've nibbled at that I'm hanging on to.
Yep.
Even if they go down. Now, right now they're still positive, but even if they go down, I'm probably going to hold on to them.
Okay.
But that's not much of my portfolio. It's a very small percentage.
Yeah. And again, you were doing some trades, if I remember our video last week, but you were going to be flat Thursday because you didn't want to be caught surprised. I'm assuming that happened.
I'm still in AMD.
Okay. All right.
And AMD is back to my buy point, but it's not under yet.
But again, you also use stops.
And I use stops. I'll always use stops. Yeah.
Yeah.
You have to use stops.
Very cool. Well, Dan, this is a lot of fun. We're going to talk about pain and where the pain might finally end in video number 2. Thanks, buddy.
Sounds good. Yep.